I have control. I'm in charge. Good morning, everyone. Welcome to this morning's webinar for the London Forex session. Lovely to, as David said, lovely to have you with us. And what can we say? As he said, it's, oh dear, it's raining really badly after the lovely weather we've had recently, but hey ho, there we are. Right, can you hear me, darling? All right. Brilliant. I think everyone else can. We had a good check on our sound before we started, and I think we've finally got it working okay. Brilliant. Before we start, as usual, may I draw your attention to the disclaimer that I know you can see on your screens. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So having said that, we will crack on. What have I got to say? Quite a lot actually today. Just in case, I've just had a quick look through the list of attendees. I can see we have some of our Forex program students, which is lovely to have you here. I know we've got some of our quantum trading users, and I can also see we've got some of you who may have just bought the books and some of you who don't know who we are. So I'm literally going to be a few seconds on this. We're going to be looking at the markets through the prism of volume price analysis. That's the sort of technical analysis side, and we'll show you in more detail what we mean by that when we look at the charts. But essentially, it's looking at a chart at the price action, but also at the volume, because those are the two indicators that we, their relationship, what is one telling us about the other, and more importantly, where the market is going next. But with the Forex market, as well as all markets, but particularly the Forex market, we also have to look at obviously the fundamental landscape, what is happening with news releases, although at the moment, given what's happening in the world with as a result of the pandemic, some of the releases, are they even applicable? The numbers are so dire. The market knows that, so the reaction to them, if you like, is not probably what you would expect under, in inverted commas, normal circumstances. But we also do one other element in this, in our approach to looking at the markets. And as we look at related markets, you say, well, what do we mean by related markets, and why do you use related markets? We use related markets for a number of reasons. Two of them being, first of all, there is a correlation, there is a relationship between individual currencies and currency pairs between with what is happening in say the stock market or the bond market or in commodities, and you really have to understand that there is this relationship, what that relationship is, because you could be trading on a chart possibly in just one time frame, which I hope you don't, but you could be just on one time frame, and all your technical picture, your technical setup may absolutely be spot on. You take your trade and something happens, and it could be because it's not necessarily a piece of fundamentals, but it's something that's happening in a related market. And the most obvious one is the relationship between the Canadian dollar or a petro currency such as the Canadian dollar and oil. But related markets also give us another very important piece of information, and that is they are a means of giving us, if you like, sentiment analysis. Sentiment in the sense of, is the market in risk on or risk off? Because that too will have an impact on what is being bought or sold in from an individual currency perspective. Now, what we've done, and those of you who already use the tools or our students will recognize this, we have developed very, very specific tools to help us monitor, if you like, look at, where is the money flowing into these individual currencies and individual currency pairs, because this market is about money flow. All markets are about money flow, but this is about money flow, and our little catchphrase that we have here is money flow, levels and flow. Levels in as much that, those key areas on a chart that are key to major players in the market, to other traders, to the institutions. We have to have a way of, first of all, identifying where's the money flowing to at the moment, where's it been, where's it going at the moment. Then we look at a chart, Then we apply our volume price analysis and the other tools that we've developed to tell us whether, you know, are we coming to a point of a reversal, the exhaustion in a move, or is the move in a congestion, in a consolidation phase, perhaps waiting for a piece of fundamental news, or maybe it's that time of the market when nothing is moving very much. And identifying those levels, we've actually developed specific indicators. You may use other methods of identifying key levels. You may use Fibonacci, you may use Elliott wave. As I said, we have very specific tools to identify those key levels, and we will show you on the charts as we move forward. So basically, that is our currency dashboard, our radar, if you like, on the market at the moment. And the best way to see it in action is actually go and look at some charts. And there's a reason I want to start with that this morning, because yesterday, back to yesterday, I'm actually looking at the Euro Aussie at the moment because there's been some very nice moves on the Aussie dollar this morning. But the Aussie dollar is also interesting. Take this to the CSI. Here we are. I don't have, the only one I have missing on my version of the dashboard is the heat map, but it's lurking around at the bottom there. And what I've done here is I've got the hourly CSI, which is our currency strength indicator. I've got our matrix, which plots the movement of the actual pairs, and I've got the array over here. I've actually got it on 15 minutes. And that is a momentum indicator, and it gives us the strength of the move that we are looking at the moment. Now, if we look at the hourly CSI here, we can see here the Aussie actually had a bit of a turn overnight, and at the moment it's moving up quite strongly. We know it's quite strongly by the, if you like, the slope of the line, the definition of this line going up. And we can also see that the euro is selling off. We can also see there's some buying coming into the New Zealand, and there is some selling in the Swiss franc. But what I want to show you here is I want you to have a look at the Aussie, where it was, where it has been, in fact, since Friday. In fact, if we look at if I take my screenshots here, this was the one that I took very early doors yesterday. And we can see here, it was, look at the blue line, it was still overextended on this time frame, in the sense that it was we call it overbought. There's been heavy buying, and it wasn't in a position to roll over. But the reason I want to show you these screenshots is because, and this was later on in the session, it was still overbought, and it's just an example of how a market, and certainly a currency, can stay overbought. It can stay in this this state, if you like, a lot longer. Those who always say then you and I can stay solvent. And it did eventually roll over. And what's the time approximately? Where is it? It started to move over at about, that's midnight. It's about 10 o'clock our time here in the UK. It's around about the close of yesterday's session. And in fact, it did actually sell off, had a little bit of sell off in the overnight in the Asian session. There wasn't any particular news overnight. For that, not that I can see. I've had a quick look at Forex Factory, and in fact, there's not much news this morning at all. And this also brings me to another point that I'd like to make about currencies and then how you pair and currency pairs. If you're just starting, you have 28 pairs here, generally speaking. Most retail traders, independent traders, trade on an intraday basis or on, to keep trades over 2 to 3 days based on the 28 pairs. On 28 pairs. I know there are traders out there who trade the Turkish lira and the Russian ruble, etc., etc. But generally speaking, they tend to stick to the majors and some of the more liquid cross pairs. But when you start, you really have to get to know your currency and understand what is likely to move that currency in the fundamental news cycle. Now, the good news is for Forex is the fundamental news cycle, the economic release cycle. It's on a month-on-month. It's a rolling month-on-month. So you know when the releases are coming up. I know it could be impacted by events that are out of anybody's control, but generally speaking, you know what's going to be coming up on a day-to-day basis for your currency. So when you start, pick your currency pairs, and really get to know them. And the easiest way to do that is go to something like Forex Factory. You've got the filter here. So what you can do is you can take out on an individual currency. So if we were going to look at the Aussie, we would take out all the others, study that economic calendar over a period, over a month, see when the releases are due, so that at least you know when they're going to be due, and then go back and look at the chart, maybe something like the 30-minute chart, and see what reaction was to that release in a pair. So not only do you look at a currency, but then you look at a pair. So for example, if it was the Aussie, I would look at, first of all, in a major, something like the Aussie dollar, but also the Aussie yen, because you also then have to apply that to a pair that would be more likely to move in a particular time zone. Aussie is obviously Australia, so it's Asia Pacific. So, you know, which Aussie pair is likely to move more in that particular session. Now, there is another place you can go and have a look at the volatility of, you know, the pairs and when they're likely to move, and I'll bring that up later. But you could do this manually. So essentially, you start with your currency, look at the fundamental releases, when they are, first make sure you know when they're going to be released, go and look at some charts with something like an Aussie dollar, because the other thing, you've got the counterpart currency. Now you say, well, the Aussie dollar, when is that likely to move? Well, it sometimes moves in the UK, sometimes moves in the afternoon session, obviously in the US session, but it can also be affected at its local time. Although the dollar doesn't come into play in Asia Pacific particularly, you will find the reaction to a piece of Aussie news in the Aussie dollar. So it's a little bit of research. What I'm trying to say, slightly long-winded, you've got to know your currency. You've got to know what is likely to move that currency. Now, there is another level to this, which we explain in the Forex program, and that is you also have to then understand is, although the economic news as we see here, we've got Aussie coming up late tomorrow morning, which is the CPI, and that's given a red flag. It's obviously an important economic release, but sometimes in the economic and business cycle, this particular item of news, the market may discount it. They may not pay as much attention to it. So although it may be red flagged according to the economic calendar, the market, other traders and sometimes investors will say, yeah, okay, well, you know, we know that at the moment in the particular type of time of the cycle, it may not, the market may not react as strongly as it would have done had we been in a different part of the economic and business cycle. A good example is something like unemployment. Okay, until the pandemic, the unemployment numbers, I wouldn't say there was that traders weren't reacting to them, but there was generally, according to the figures, full employment, fullish employment. You know, they weren't at an extreme. Now suddenly, with the pandemic, and you know, millions of people have been thrown out of work, they are going to have a bigger impact on the markets than they would have done prior to the pandemic. I hope I've explained that. David, do you want to add anything to that? No. What I've said about fundamental news? So that's a little bit of perhaps work for you to do if you're not one of our students, and you know, this is all in the program, but it's something to think about as well as looking at the technical picture. So Euro, now Euro Aussie is actually a pair that I'm short. I always seem to be short the Euro Aussie, but there is a particular reason for that. Just have a quick look at the Euro Aussie Euros. Here we are. That's my. And this is a really good example of a pair where it's been in a really nice downtrend, as we see here. This is the daily chart. It's been in consolidation now for a little while. So price action in the faster time frames has been well, when we've got nice wide candles, it's been good two-way price action. But it's really been encouraging for my longer term trades in the fact that it's been at the volume point of control while it's been in consolidation, but I now have had a break lower. Certainly yesterday was a break lower in Euro Aussie. A little bit indecision here, a bit of a small candles, which is always, can be very frustrating because the price action is very contained. It's very narrow, and so what does that tell us? Well, we have to be patient. And I've got here the actual move from this morning. Here we are on the 3-minute chart. We've had this move away from roughly, when is it, about 6 o'clock this morning. But you see here the trend lower. It's not a nice smooth trend. There's been a bit of volatility, quite a number of sort of attempts to rise, attempts at pullbacks. I think it's hit a particular resistance level. Let's have a look. Let's have a look here. No, not quite. I've got my Camarilla here at the moment. It's really this break here at the R1. It's in consolidation at the moment. So as I said, but the daily chart tells me the kind of price action that I can expect at the moment. What my Renko tells me is it's still in this downtrend, but you can see here attempts to rise, but everything is still red. Are we going to get a reversal? Not sure yet. We'll wait and see. It may just simply move sideways. London's come in. It certainly hasn't really affected the pair that I'm in at the moment. Just pass over to David and see what he's been looking at. If you've got any questions, please drop them into the chat box and we'll answer them. I'll either type in a reply or we'll answer them on air.